Welcome to Invest. We'll talk about investing, finance, and professional development. That's the current time of 9:33 a.m. on the Eastern Time on Friday, on June 3rd. Respect to overall crypto market and the equity market, we are, I would say, a little bit shaky across this morning, despite the job report that came out for May. To be a relatively good one. We have, based on high level synopsis, on the payroll, it rose by 390,000 in May, which is slightly better than expectations compared to Wall Street, which is 328. Compared to the Dow Jones estimates. And with respect to unemployment rates, it held at 3.6%, while a more encompassing jobless rate edged higher to a 7.1%. And then if you look at that in a little bit more specific, average hourly earning has also risen slightly, less than expected, but we're still up 5.2% from a year ago. And then with respect to what's the key driver on this gain is mainly coming from the leisure and hospitality sector, followed by professional and business services, then the warehouse and transportation. So it seems like we have a positive job report. But interesting is that because yesterday we had some buying pressure across the board. So it's quite interesting to see that despite a positive report, the rate is still hiking, which is not that intuitive to us, right, at all. However, if you look at the needle driver more specifically, the equity side is normalizing, not really a sell-off across the board. We're down about 1%, but yesterday we're up about across the board 2.5, almost 3%. But it's mainly driven by some of the other factors, like oil is also spiking, closing in almost at the 120 mark. And then with respect to crypto, you can see that we are selling off a little bit more severely. And it seems like this is mainly driven by a New York State bill cracking down on Bitcoin mining. So whenever you hear things like cracking down or banning or restrictions, regulatory dynamics along crypto, it drives negativity and selling pressure across the crypto market. So it is not really. It's kind of a mixed bag this morning, I would say. It's both a combination of normalization, despite a positive job report, which is kind of watered down at the moment, combined with the rising oil rate, the price of oil, and with respect to the 10-year yields, combined with obviously the more of a regional bill of New York cracking down on Bitcoin mining, driving the negativity that we see across the spectrum. And also, again, Friday, but this is more like a supplementary type of factor that we also have to be considerate of. So let's just dive into technical to see what's happening now. Seems like we have got over this hurdle, but I've been getting questions around on my Patreon earlier this morning, and also with respect to some of my recent tutorial that I've been having with my Patreon members as well. Is like, do we see 1700 coming for sure? I'll say the propensity is high based on what we see so far. So let's just dive into it. So with respect to recording time of 9:36 a.m. on the Eastern Time, we are 1756 at the moment, in between levels. We are basically levitating, at the level of 1750. But the real level again is at the 1700, right? Or more precisely, 1725 if you want to be really precise, but just say 1700, right? And right now the inertia looks relatively not the best, right? You can see that both needles are pointing down at the 36 out of 70. At the same time, the MACD need to cross down and then cross up, right? So ideally going down to 1700 and even possibly 1650, as we cross down and then cross up will make sense, right? And I think we might do that all the way until, in just proximity. I don't want to time the market because that's impossible. Around the next FOMC meeting, which is on the 14th and 15th of, I would say 2 weeks out from here. And then with respect to the Bitcoin dynamics, we're down about 2.5%. So I'm just going to run through this quickly again. I feel like I'm repeating myself every single time. 2850, 2500. If we go down further, it seems like we are likely going to be going down further because of the cross down and then cross up on the MACD. So you need to kind of cross down and then cross up. And secondly, you could see that we have rejected every single time we try to get up, right? So ideally coming back down to the next support level around 30. So 28,500 will be very logical. Ethereum Classic down about 4%. 2150 right now, so anywhere starting from like I would say $20 down was logical DCA from here based on the current setup. And then with respect to Dogecoin, I would say anywhere from starting from the high 7s all the way to the low 7s, like all the way to the 16.5 would be very logical DCA in the frames of where we at right now. Cardano down about 5.5%, just giving up everything that we gained basically starting from the 30th of last month. So I think anywhere from basically starting from 50, 45, 35 respectively, or like the flat numbers that Cardano is trading at. Solana is still selling down at 5.4%. We are at the cusp of it right now. You can see that clearly. We are at the exact level on hourly. I'm looking at the hourly right now, so let me look at this on a daily. You can see that we're gliding on the next consolidated level, right? We could not get up to 49, which is basically 50. So ideally come back to the 38, so which is where we at exactly at the 29 out of 70 right now. So what we need to do is cross down and cross up. So, but I don't foresee the cross down to be a relatively major one. So I think we would just kind of slide down a little bit, maybe break down to 35, and then recuperate from there. It's relatively stale in terms of momentum. XRP about down about 1.25% at 40 cents at the moment, right? 40, 35, 30 respectively. Polkadot's down about 1.8% at $9.31 at the moment. So I would say anywhere from basically high 8s all the way to the low 8s, all the way down to 7, like would be logical DCA. Again, you need to cross down and then cross up across the whole market. Algorand, 37 cents at the moment, so anywhere from basically current level down to all the flat numbers like 35, 30 respectively. Shiba Inu looks quite attractive actually. So we're in between levels right now. 1400 was the next level of resistance, 900 is the next support, so we're getting close, right? So again, you need to cross down and then cross up. So I think as you break below the 4 digits, buying around like the 3-digit mark doesn't hurt really. MATIC down about 5.6%, 58 right now. I would say anywhere from basically current level down is logical, but again you need to cross down and then cross up. So I think all the flat numbers below like 55, 50 would be logical DCAs incrementally. AVAX down about 7% so far, 22.83 right now. So anywhere from basically 22 downward from here, but again you need to cross down and cross up, right? So yeah, I would say starting from like the high 22s, right, like which is where we're at right now. But let's just take a look at this closely real quick. Yeah, we're rock bottom, so we're forming like new lows consistently. So yeah, 20, like all the flat numbers, right? 20, 15, possibly even to 10. So watch out for it. But you can understand that if the MACD crossed down, and then we're landing on the relatively consolidated zone around like 26 out of 70 on our RSI scale, which technically translates into $20 for AVAX, can be logical buying opportunity. But ultimately, you have to believe in this long term, right? So appreciate you for joining me this morning. Again, oil fluctuations, 10-year yield fluctuations, being counterbalanced by the payroll number, which is positive, but counterbalanced by the New York bill cracking down on Bitcoin mining, counterbalancing with the weekend affectation. So it's like kind of a triple whammy that we're seeing today. All right, so appreciate you. Have a good day, and I'll check you out on the next one. Take care. Bye.